What's up, everybody? It's your boy Savi B. I'm back again after my long hiatus with a portfolio update. I think my last portfolio update was somewhere around October. I'm not too sure. I did take quite a while off from posting videos and making videos. Um, I just got really busy. So here I am again. Gonna post, gonna try to post at least one update a month. To be honest with you, I don't care if anybody watches this. I was watching my old videos, and it's nice to see my portfolio grow, uh, get a little bit of my mindset at that time, and see how far I've come. All right, so here's the portfolio. Right now, it's $14,813.56. On the day, I'm up, $375. But when we go to the week, I'm up $500. On the month, I'm up $749. 3 months, this is where it kicks in, due to the coronavirus, everything that's going on with this pandemic. I am down $2,496. And on the year, I'm down $2,384. So 13%. At the lowest bottom, I was down like 20%, as you can see here, $3,442. But it's all good, because I'm buying for dividends. I'm buying for that cash flow. Uh, just as of right now, I see it like, I'm trying to build a money machine. And right now, the pieces for my money machine are on sale. So why wouldn't I buy more parts for my money machine? So let's go ahead and look at what I've got. So I've got some Global X Super Dividend. Uh, I got 2 shares. It's an ETF. Another global super dividend ETF. I got like 23 shares in this one. These are monthly payers. That's the reason I bought them. I'm kind of getting away from these ETFs just because expenses are pretty high, but I'll keep what I have. First Trust Multi-Asset Diversified Income ETF. We got 25 shares of this. As you can see, I'm down $141 on it. Again, this is another ETF that I'm trying to get away from, just because the expenses are so high. I got some Hawaiian Electric. I picked up 2 shares since the coronavirus. Um, I'm still up 25 bucks on that. British Petroleum. I am down $155. I have not added any new shares. Not that I don't think the energy sector is undervalued. I just want to see what happens. I want to see the light at the end of the tunnel. The economy is opening itself back up. Um, but, it's not like there's a pent-up demand. As soon as we release the gates, that, everything will just pop back to normal. I think that, a lot of these news outlets were talking about a V-shaped recession. I think we're far beyond that already. Uh, so I just want to see things looking better, not just in the short run, but the long run. Of course, we're always going to need oil. It's not going to be something that's going to go away immediately. Uh, we are looking at renewable energy and things like that. But I just want to see a brighter future. As of right now, a couple of weeks ago, oil was negative $37 a barrel, which in like terms of history has never happened before. We have too much oil right now. Another one that I have is Exxon Mobil. I'm down on this $174. I still haven't picked up no shares. I should. I honestly should be buying some right now. But like I said, I want to see, what's going to happen. There's still a possibility that these companies could go bankrupt. Summit Midstream, this is a natural gas midstream company, by far my biggest loser. Um, I bought at $8.13, and as of right now, one share is 88 cents. So I've lost about 90%. I'm just holding on to it just to hold on to it. I don't know why. UGI, I got this because I had bought AmeriGas, and then they bought AmeriGas, so I got 5 shares. Don't really know too much about it. Ford, I've got 100 shares of Ford. Really haven't picked up any additional shares. They have suspended their dividends. Uh, I'm just sitting on the sideline with what I got. I do sell covered calls on it weekly. That's another form of income that I've been using. Coca-Cola, um, still got 5 shares. I have not added any extra to the portfolio. Um, Coca-Cola is a good one. I should be adding more. Um, I don't know why I'm not. I'm looking into buying some Pepsi as well. Maybe that's the reason. Uh, Kraft Foods, I got 15 shares. I'm down $23. It, it's one of those staple brands. It may be losing some shelf space, but I don't think Kraft Heinz is going to go anywhere soon. AGNC Investment, I got 20 shares. I'm down $97. This one is a little bit scary right now just due to the pandemic, and seeing like, you know, single family homes and things like that. People aren't working. People can't pay their bills. You know, people can't pay their mortgages. It's a tricky one. We'll just have to wait and see what happens. I would like to add more to the portfolio, but right now I just feel like it's kind of risky, uh, just with the current environment. Icahn Enterprises, it's a conglomerate. It's like a $2 dividend. I was chasing the dividend early in my portfolio construction. Um, so I'm down $151. I still haven't sold off. Ooh, I'm just waiting to see what happens, to be honest with you. SPHD, I got 2 shares. Like I said, I was chasing the dividend. This is supposed to be a low volatility ETF, but as we can see in 3 months, it's down 24%. I don't think that's very low volatility. Uh, it's a pretty big loser. AT&T, I bought this because I think it's a solid company. Dividends, I mean, it's a dividend aristocrat. It's just very good cash flow. Business has kind of been performing poorly based on all these acquisitions. They do have quite a bit of debt, but I think the dividend is more than safe, although they're servicing debt. Um, I've got a $52 dividend coming up in a couple of days. I do have 100 shares. So I've been selling covered calls on this as well as an extra form of income. I mean, some weekly calls you can sell for, $20, $30. Um, that's pretty healthy. Cisco, we got 10 shares, down 33 bucks. This is one of the dogs of the Dow for this year. Uh, it's a pretty good dividend payer. I would like to add more time for the time being, just because I bought it at 46 and it's at 43. I think I could do good in it, to be honest. Altria, they're sin stock. Um, I should be adding more again. I got 12 shares, upcoming dividend of $10. I'm down $81. I was buying at $46 and now it's at 39. One thing that we'll always need is tobacco. I mean, since the beginning of history, uh, they are involved in some kind of lawsuit with Jewel and things like that. I haven't really been keeping up on that. This is one that kind of just put to the back burner during this whole coronavirus pandemic. GEO Group, I've got 180 shares. I'm down $558. This is a prison REIT. And to be honest with you, I think that this is really attractive. I mean, if you look at the dividend yield, it's 16%. and they've got government contracts. There may be some issues with, private prisons, but as of right now, I think that this is a good REIT to invest in just because their primary customer is the US government, as well as other governments. They help design facilities, things like that. Pfizer, I've got 2 shares. I should be picking up more, like everything else in my portfolio. They're in the medical industry. They design different types of drugs. I definitely want to cash in on some of those things, so I will be adding more. Bank of America. Banks are having a really rough time during this coronavirus pandemic. Uh, with possible just non-payment of loans, people are freaking out. You know, doing bank runs, pulling money out of banks. As we can see, Bank of America is kind of having a rough time. They were at $34. Now they're at $23. I bought at 30, so I'm down. But the balance sheet has never looked stronger. When we entered the Great Recession, 2008, 2009, balance sheets were a little bit weak. Banks were weak, totally. But I feel like they've kind of learned from the last time, and banks this time around are a little bit stronger. So, I would like to pick up more banks. Johnson and Johnson, I got 3 shares. They have just gone up. It's ridiculous. They crashed a little bit to 119, and then all of a sudden they're at 155. They have been doing some trial runs with some COVID-19 shots, I guess, to help immunize people, more vaccines, things like that. I know one did fail, but I guess they got a couple other in the pipeline. Um, they're attractive. Even at $155, I think that they do have a good moat. I feel like this is a great business to get into. It's just that the stock is pricey. Cardinal Health, this is another healthcare company. Um, to be honest, I don't know why I bought into it. I really don't. I just wanted to get more into healthcare. I really didn't do too much research on it, and I bought 2 shares. How did it end up back at Bank of America? I don't know why there's Bank of America twice on my thing, but whatever. Caterpillar, they are like the number one distributor of heavy equipment in the world. They pay a nice dividend. Uh, I'm not too sure if they're a dividend aristocrat or a dividend king. I bought 1 share. I'm looking to increase my holdings in Caterpillar just because it's such a giant company. Essential Utilities. This used to be a water company that then restructured, changed the name, I guess. So I got 1 share in that. And Bank of America, again, I don't know what's going on. Visa, I bought, just a fraction of a share, like $10 or something like that, or 15. Uh, as of right now, due to the pandemic, everything's been hit. I think Visa is a really long-term play. Uh, as well as MasterCard, which I should show up later. Allstate, as an insurance company, I think Allstate is very well positioned. Um, I I hope to add more to my portfolio. At Bank of America, again, Disney, I think Disney is crazy cheap right now. Uh, they are like the number one conglomerate in the entertainment industry. They have all of Disney's things. They got Marvel, they got Lucasfilms, they've got all the theme parks. They just launched Disney Plus. Like Disney, there's a fire sale on Disney right now. And I hope to add more to my portfolio. McDonald's, I think McDonald's is just an amazing company, just based on the sheer size of it. I don't think that let me rephrase that. There are very few incidences that could happen that would cause McDonald's to disappear. One would be an asteroid hitting the Earth and no people being alive. McDonald's is a solid company. Like everything else in my portfolio, I hope to add more. And there's Bank of America yet again. I don't know why it keeps popping up. Vanguard Total Bond Market ETF. I like this. It's a monthly payer. It helps me get into bonds. I split my portfolio up, 40% my own picks, 40% ETFs, and 20% bonds. So as of right now, I got 10% here. I do want to pick up some mortgage-backed securities, and I also would like to increase my holdings in the fallen angel sector. So that's some things that I'm looking at. Here is the fallen angel, the high yield bond. These are monthly payers just as well as the previous bonds. I definitely I want to get this up to somewhere about 5% of my portfolio. So I do have a little bit more to go into that. At Bank of America, yet again, Chesapeake Granite wash. It was a bad move. I think he got delisted because I can no longer purchase additional shares, but I can close my position. And they- there is supposed to be my ETF. So I am trying to get into Vanguard Total Stock Market. I want this to be about 25% of my holdings. As of right now, it's only 8%. So I do have some ways to add more to it. I'm kind of competing against myself. I want to index as well as dividend appreciation. So I'm splitting my portfolio up and I'm challenging my portfolio against itself. So we'll see what happens there. But there you have it. That is my whole portfolio. If you guys like what you hear and you want to follow my journey, go ahead, subscribe, hit the notification bell, and I'll see you all on the next video.